Good evening, TheoTRADE. This is Corey Rosenblum, and you're watching the Theo, not the video, for the 17th of October here in 2023. I only have one question. How long will this resilient market last? And what do I mean by resilient? Let's start with that. We have a market that's down at the lows, which has the potential to break even further. Many stocks had a similar play, including Apple, which had a potential to break. We had stocks like Meta, which had a potential to break a little bit stronger. And other stocks like it. Nvidia would be a stock that had potential to break. Let's go back to where we were a little bit ago. But that's not what happened so far. And on top of that, we had some very negative, or at least bearish, headlines that didn't result in the market going down, but instead going up, and a big intraday reversals 2 in a row. And those are what had me pinpoint in my end of day sessions or afternoon sessions, this concept that I've been driving, which is market resilience. So let's just recap a couple of headlines from the last week or so. On Friday, a week ago, we had the better than expected jobs report. That meant any good news is bad news. Everything goes backwards. It's opposite George, opposite day. That's a Seinfeld reference. But that's what happened with the better than expected or stronger than expected or more jobs gained than expected on the first of the month jobs report. We instead had the market, we had it go down, but that was your open, that was your close. And that took us into Friday. And what happened next? That was your Friday. We go in the weekend and there's some terror activity, there's some Middle Eastern conflict. Crude oil jumps 5%, and of course geopolitics. Geopolitics means surprise events that take place like terror attacks or the like over in Israel, Middle East, and the conflict increasing. We thought the market, I did too, would come down about 2 or 3% as we started Monday's session, and we did. But by the end of the session, that's Monday, we are up another resilient market day. And that's been where we've traded. For the most part, resilience just means holding on in the face of bearish or negative news. The market ought to be way down here. It's not. It's actually up to swing highs. So that's what we'll be focusing on in today's session and in the video. But we'll also have to look at some earnings. So that's what we'll talk about. How long will this resilient market last? And what exactly do I mean by that? I mean a market that has good potential to fall and it has good headlines. Good meaning bad, better than expected jobs report, and of course Middle East tension and the conflict increasing. Well, those are not really good things that support market rallies, yet that's what the market did. But outside of that, we are seeing some volatility in crude oil. Now, what are we seeing here? Crude is in a trading range that just came down from the 92, 93 per barrel, and that's into its sideways trading range. But we had the conflict news, we had that surprise event, and that has sent crude to the upside. And the bond market, under all the headline news, is getting a little bit of a safety play, or at least it did from last week. We're seeing the bond market down at new lows. Looking at the TLT, looking at the ZN, that's our 10-year Treasury note. I like to look at that one. I like to trade the TLT, but actually follow the ZN. And that's at 52-week lows, pressing off the bottom. And the ZB is your 30-year bond. And on the other side of that is the 10-year Treasury note yield, which is up there at a closing high in today's session. So don't let that headline take you by surprise, or don't let that chart take you. We have a closing high of a long period for the 10-year Treasury note yield, pushing up at 4.8%, 4.9%. Not far from 5.0 on the Treasury bond and Treasury note. That's the yield. What about gold? Gold in the middle of the conflict and the headlines actually received a decently big bounce, big rally up from that 18, we'll just say 1800 per ounce. Now it trades just shy of 1950 as a commodity. So that's a safety, or could be considered at least a safety play. But gold, in a bigger sense, outside of a week or headline news here, is just seeing a continuation of the trading range at about the 2,000 per ounce. That's your upper resistance, and the 1,700, that's your lower support. So a lot is going on, and let's take a quick peek at our intermarket chart. So let's go back to our resiliency in terms of the jobs report, first of the month jobs report, and how that turned the tide of the market. Not just that. I don't want to hang the entire rally on the jobs report. There was also the Middle Eastern news and the other conflicts and other headline news that would be considered bearish. Nonetheless, that was the turning point, or set the stage for the turning point. There's the jobs report, and there is the Monday after the attacks on the weekend. And the market has held its own. S&P is about the 400 level after its break and turn in the short-term trend. We had crude that was on its way to the downside as well. There is the news. There is a surprise attack. There's the 5% gain. But oil actually went down to test out those lows at 82 before rallying to close, at least of Tuesday night here when I'm doing the video, just shy of 88 per barrel. So that saw a reversal as well. So that's what I want to highlight, just making this really simple. S&P went down, crude went down, but both have rallied and broken trend, just like gold. And we see gold here, gold futures, broke the trend at the same point. There's the jobs report. There's the surprise Middle Eastern news. And gold has sustained its resiliency and its upward movement since these headlines. But after a little rally in the bond market, this is again the ZN, we see bonds not following suit. All these markets are reversed back to the high, bonds back at the low. So that's what we'll be focusing on as we go through this week. This week is going to have some big earnings, and they'll take place on Wednesday. Now, we've had split results within the financial stocks. Some of them reported earnings last Friday, others on Monday. We just saw Goldman Sachs, and others, Bank of America, on Tuesday today. We'll be seeing some technology names. Tesla, going to be one I'm watching, and Netflix, and Morgan Stanley, also Procter & Gamble. Thursday is going to give us the Philly Fed home sales. Nothing big on Friday, but we'll take a look at AT&T, Intuitive Surgical, Crocs if you want, Freeport-McMoRan, and Philip Morris. Friday gives us Schlumberger and American Express. So those are on the docket for the earnings and stocks in play. So what about Netflix and Morgan Stanley? Anything big to note about those? Netflix is getting its sell side, right? That's what could have been. That's what could have been for the market, is a continued sell swing activity. And Netflix is at those lows. Its expected move going into the earnings that will take place after tomorrow's close is about $30 per share. Implied volatility, 116%. Morgan Stanley, I wouldn't say there's a lot to its stock. It's a trading range, broke under. And its implied volatility for earnings, half that of Netflix, $3 up or down. But it will be, I think, Tesla, where any fireworks or any major moves or volatility could take place. Netflix has fallen in the background of the major stocks, but Tesla has not. And it's showing some resilience and is going sideways between about 280 and about 240 just in the last few months. What about its implied volatility? A little bit lower than Netflix at 82%, 15 up, 15 down. But Netflix is a larger, or I should say Tesla is a larger company. And let's take a look at how that fits in the broader market. So from here, there's Tesla. It becomes a little difficult to see Netflix, but there's Netflix. And in the broader Nasdaq, or at least the Nasdaq 100, there's Tesla. And we do have to search a little bit to find Netflix. It's right there. So that's coming up in terms of earnings in the next few days. The next session tomorrow. And just a quick look at stocks that made new highs, continuing the theme of resilience. Vertex, Progressive, AJ Gallagher, Aflac, and others. Halliburton, Williams, and a few others. We have Lowe's. May or may not be familiar with, may or may not trade those. So quick look at those stocks showing resiliency. There's Vertex Pharmaceuticals up at those 52-week highs. There's your weekly perspective. There is your weekly perspective. 180 per share not long ago, up to about 380 in the course of over a year. And that's a very stellar gain for Vertex Pharmaceuticals. But Progressive and some other insurance companies are seeing monstrous rallies and rises in their share prices. But they've seen that since the pandemic, roughly 2020. So Progressive PGR is up there 160 per share in a breakout, but it's a weekly chart uptrend. And then Gallagher, Arthur J. Gallagher companies, a little bit more of a steady uptrend, but there's your weekly perspective. And then another insurance company, Aflac, AFL, also rallying, breaking out, and making those 52-week highs in the context of a broader, bigger picture uptrend. Anything jumping at our attention or jumping off the scans for weak stocks getting weaker, one name to point to, it's Moderna. And Moderna is off at a new 52-week low after another round of aggressive selling like we saw into July into August, as that downtrend and weak stock getting weaker continues. But back to our earnings, because that's where the market could move. We have housing, we'll have home sales, Philly Fed, Tesla, Netflix, and a few other financial stocks will take place this week. Will the resilience continue? These stocks will have their say. As always, be careful and safe. This is Corey Rosenlund with tonight's Theo video update for October 17, 2023.